The thing that I have struggled with the most in these last few weeks is trying to come to a conclusion on inflation. My worry is that it's here and it will be persistent. And inflation comes in two ways. Way number one is if you massively increase the supply of money. Why? Let's just say the economy had $100, and now all of a sudden you just print another 100, so now there's $200. What will happen is all of the goods and services that make up that 100 will get repriced to absorb the 200. So prices go up, inflation goes up. The second way that inflation can happen is if middle and lower income people buy and spend. Because when rich people have extra money, they just buy financial assets. That's why you get financial bubbles. But practical goods and services are bought by average, everyday, normal working folks. And their wages are going up. And so I think what we've created is a really distortive inflationary cycle that's going to really hurt the United States because, as Sachs talked about, we cannot print enough money to pay for the debt when interest rates go up. I think what we've realized as well at the end of this is I actually, again, now to use this empathy card, I'm going to give the progressives my empathy card and say, I understand what you're trying to do. And I believe in a lot of what you're trying to do is to even the starting line for everybody. Right now, a lot of what you end up proposing distorts that goal by trying to, even out the outcomes and even the finish line. But I really do think they want to even the starting line. But here's the thing that we all have to realize now. All the things that the progressives want to tax and fund are actually being done by private corporations. And I think we just have to acknowledge that and make a decision about whether as a society that's okay or not. I'll give you two examples. Number one is the federal minimum wage. We have tried for years and we have debated raising this minimum wage. It still sits today at $7.25. Just this week, McDonald's moved their minimum wage up. Starbucks moved their minimum wage up. We're talking about, entry-level quick service jobs that now pay $17 to $25 per hour. Right? So 2.5 to 3+ times the proposed federal minimum wage.
The free market.
And so what government didn't and wasn't able to do, the free markets have done. Second example, we tried to get free community college inside of one of these bills. It was dropped. Now, depending on where you go, the nation's largest employer, Amazon, actually will just pay you to go to college. Right? So they are replacing that intention and a version of the GI Bill, but as a private organization. So I think what we also have to realize is that maybe some of these policy decisions is actually a little bit of, getting tilted by the fact that private organizations are acting more nimbly to actually implement this progressive agenda, because it actually exists in America if you're willing to take the time to look. Rich people don't create inflation. The middle class and the lower middle class create inflation. There's just not enough rich people to matter. They're irrelevant. So when you look at the last 2 or 3 spikes and waves of risk that we've seen globally, they've come from large multi-hundred million person cohorts of people, right? Those could be in Asia. Those could be specifically in China. Those could be in the United States plus all around the world because of certain loose monetary conditions. That's what we have now. We have a multi-hundred million, probably approaching more than 1 billion person strong liquid buying pool of people that are, again, as I said, if the lowest on the pecking order is now making $17 an hour, we all know this, guys. It's not as if the inflation stops at $50,000 a year. Everybody's wages rise. So consistent and persistent wage inflation will allow you to spend more because that's just what people do. We also have high savings rates, so people will feel more flush with money. The point is that everybody will spend. They will spend more. You can't get cars. You can't get this. You can't get that. All this pent-up demand will get fed. And the downstream implication is I think that prices will rise, but it will disproportionately hurt the middle class and the lower middle class. And then these asset bubbles will probably deflate, or they'll have to get re-rated. And if the Fed stops tapering and, hikes rates 2 or 3 times over the next 12 or to 18 months, man, this is an ugly, ugly stock market. That's the part that really scares me. So for example, when everybody gets tilted because there's some Shiba wallet, where 8,000 turns into 5.7 billion, right? So for those that don't know, there was a Shiba Inu coin, which is a shit coin, which was basically there to ape
the other shit coin, Dogecoin.
The Dogecoin, right? A meme coin. All of a sudden, some guy 13 months ago put 8K into it because the whole market cap was 80K. And then all of a sudden, over the course of these 400 days, that wallet holds $5.7 billion of value, or 10% of the entire market cap of Shiba. People get tilted by that. Then there was an article today in Bloomberg where there's a gentleman, a 66-year-old man in Singapore, who's a billionaire, right? So he was successful in his own right. However, he had made in his entire career about 1 or 2 billion, and he has made 7 billion in the last 2 years speculating on Tesla call options. So buying short-dated calls, right? Riding the wave, making money, allocating the gains, buying the underlying Tesla security over and over and over again. And so, I was talking to Nat about this, and I was telling her these examples, and she's like, that's what sounds like a bubble. Because it really is very difficult to be in business. There are these businesses that have, I would say, interesting products that are growing well, but they may not actually be very important companies, yet they trade at enormous valuations. And then you have these companies that are just so superb, and I'm talking about Microsoft, Google, Apple, and Facebook, that now trade in many cases at some pretty deep discounts to their intrinsic value. But this is the sign of this histrionic behavior that I think embellishes the end of a bubble, right? It's this thing where you look at a growth rate and you don't even ask the structural questions about business quality, viability, sustainability, competitive moats. You're like, oh, well, it's growing from 300%
total addressable market.
It's only decaying to 200%. I buy. Well, it's like, but what are you buying? And is there any longevity and staying power? This is why, I think there are some great businesses in SaaS, but I also think there's a lot of head fakes. And in the public markets, particularly, people just want to buy that growth, as David said, because they're chasing yield. They're not, do they really understand, am I buying this company because I really believe in this database technology versus that streaming technology versus this container technology? They don't know any of those things. I got to say, when you saw these quarterly earnings, there is no better business in the world than Google. Single-handedly, par excellence, the most incredible money-making machine that's ever been created. And a close second, as it turns out, is Microsoft.
Unbelievable. I mean,
which is now the most valuable company in the world, greater than Apple.
Well, and Friedberg's been saying this on the podcast forever, but just to give people an idea, Q3 revenue at Google was up 41% year over year.
I think on the Meta thing, I think the risk is if Google and Apple take the hardware costs to zero, because I think there's an incentive in a highly fragmented ecosystem. You have to remember, when Apple introduced the iPhone, there was nothing that came before it. So it was completely groundbreaking. And I think what Facebook has to figure out is how to make their VR experience so revolutionary that it attracts developers. And in the meantime, if Apple and Google figure out how to kind of give it away for free and just kind of make it a low-cost hardware game, where everything else, Jason, as you say, is this kind of open source thing where it's like a browser.
Yeah.
Right? Where everything just exists in a DeFi kind of world.
Like the web and the internet.
Then it's a little bit more problematic for all the money spent.